Can everyone see my screen? Okay, awesome. So hi everyone. Today we're going to be talking about tech, crypto, AI, and social media. It's a loaded subject, so hopefully I am able to provide enough context, help everyone figure out how to debate these kinds of motions. I think everyone sees these motions at lots of majors recently, and we're going to get into why that is the case. But before we get started, just some quick intro for people who don't know me. Why is Elisha talking about tech debates? I love them. I absolutely love them. I've debated since 2019. I think the most important thing for anyone to notice in 2022 and 2023, I bottled the national finals. That's the Ghana University Debate Championship finals. I was in the PUDC finals. I lost. I was in the World ESL finals, and I lost, all in the same calendar year. So that's good news. But the reason why I love tech and so AI and social media is that I've been in crypto since age 16. So it's what I do besides debate. Before that, I also contributed to open source projects like Mozilla and Wikipedia. I used to edit Wikipedia as part of the Wikipedia community in Ghana. You could also call me a or some call me an Apple sheep because I love Apple products. And unfortunately, I still call them out when we need to call them out. So don't worry, and catalysts in this presentation. All right. So why tech debates, right? Tech is literally in everything that we do, right? So you have politics, you have economics, if you really want to see how people engage with new realities, you want to see how people or society would balance progress and protect what we've already built, and also see how human beings will change as tech changes and as society changes because of technology. It's important for you to set motions that would allow you to do that. And one of the ways to do that is through tech motions, right? Like tech motions make it very easy for you to just get us to confront our realities, because the realities that we are dealing with are built on what the top tech companies, what the top social media companies are producing and building around us. All right, so let's get into the first thing, which is crypto. And I picked some memes just to depict the way and manner in which people deal or get introduced to crypto. So the first one is about taking profits. I'm sure we all have a friend who has bought some coins that would go to the moon. And when it goes to the moon, this friend would become a billionaire, but the coin has never gone to the moon. The friend has probably lost a lot of money and they're still holding the coin. We call them bag holders. We also have, I don't know if a lot of people have this friend, but there are people who get into crypto. They do make some profits, but they realize it's not what they were told. Not everybody that's in crypto owns a Lambo. And sometimes people can't even like afford a bicycle after investing in crypto, right? Then there's also the fact that lots of people are not really into crypto, even though it's a big industry. It's not as big as AI and social media. So a lot of crypto conversations don't happen around us. So it becomes a bit difficult for people to deal with cryptocurrency debates and cryptocurrency motions. So let's get into what cryptocurrencies are, right? So I think the most important thing everyone needs to understand is cryptocurrency has a definition, but as we get into the conversation, you're going to realize that some cryptocurrencies do not fit this definition. And it makes it a very interesting conversation, but it also makes it very interesting for people when they are framing and trying to have cryptocurrency debates. So let's look at the broad definition of cryptocurrencies, right? It's money that runs on code, and not on the structure of money created by states or banks, right? So states and banks have created a structure of how money works. At the beginning, you have gold reserves. People come to the bank, they exchange gold for currencies, which are a legal tender in the country. So currencies were backed by gold. These days, not so much. Through things like quantitative easing and other things, people are printing currencies out of thin air. And that's a conversation we'll have later on in this session. My point is, crypto flips the script and says money is a social construct that is built around core principles like scarcity and utility. And so if I create a cryptocurrency that is scarce, has utility, then that particular cryptocurrency could have value. And because that cryptocurrency has value, you can use it for various things. I think the third thing that major cryptocurrencies have beyond scarcity and utility is the fact that these cryptocurrencies are cryptocurrencies that come up as a result of work, right? So what this means is like people don't just get handed these cryptocurrencies. People have to put in work, and usually the work involves them setting up very complex technological gadgets called miners to mine the cryptocurrency. And mining comes at a cost in terms of time, in terms of money, and also in terms of electricity. So yeah, putting power in, you're putting money in, you're putting in time in order to mine Bitcoin. So it's not just money that comes out of thin air, right? But then there are cryptocurrencies that also don't have any of that, and it's just money that comes out of thin air, and we're going to talk about that, right? So the more technical explanation is that cryptocurrency is a digital or virtual form of money that operates on the blockchain. So money on the internet that does not operate on the blockchain is not cryptocurrency, right? So, I mean, you can have virtual forms of money. You can send bank transactions across the internet, right? So you can use your bank app to send money from one person to the other. That isn't cryptocurrency. Cryptocurrency must operate on a blockchain. So the conversation then becomes, what is a blockchain? It's a decentralized ledger that records transactions securely without a central authority. And the way this works is, for most people who don't understand what blockchain technology works, it's just easier to explain it as a register of transactions and information about a cryptocurrency. So it's the blockchain that tells us how much Bitcoin Elisha has in his wallet. And it's the blockchain that ensures that when Elisha sends one Bitcoin to anyone, that one Bitcoin is subtracted from Elisha's wallet and sent to the person. And there's a record of that subtraction in a way that is verifiable by everyone else. So what this means is, if someone does a cryptocurrency transaction, anyone across the world, provided they know how to go through blockchain data, can confirm and then see if the transaction has already happened. I'm going to try my best not to get so technical because I'm trying to explain this in relation to debating, right? So what are the types of cryptocurrencies? I put 3 different types, and then I put a 4th type, but you can expand this a bit beyond what I put here. But I'm going to explain why I did it this way for debating purposes. We have native cryptocurrencies, and these are cryptocurrencies built on their own blockchains. So you may have heard of Bitcoin, Ethereum, ETH, Solana. These are cryptocurrencies that were built with utility in mind, right? So these blockchains have various kinds of utility, and these blockchains are built, these cryptocurrencies are built on their own blockchains. So what this means is Bitcoin is built on the Bitcoin blockchain, Ethereum is built on the Ethereum blockchain, Solana is built on the Solana blockchain. Bitcoin, for example, exists. The utility of Bitcoin is to become the global legal tender. Some also say that Bitcoin is meant to become digital gold, meaning that it also wants to become a global store of value. So a global tender, global means of making payments, doing transactions, become digital gold. People store value via like holding Bitcoin. And we've seen that both happen in the last couple of years. And that's where the speculation and the price increase of Bitcoin comes from. The more adoption Bitcoin gets, the higher the price goes up. The more people use Bitcoin as a store of value, the more the price goes up. People hear big companies accepting Bitcoin as a means of payment. Everybody gets excited. The price goes up because it is fulfilling its utility. Ethereum also has its own utility. Solana has its own utility. Inside the conversation or inside the category of native cryptocurrencies is other kinds of cryptocurrencies. We have privacy coins, right? Or privacy cryptocurrencies. These cryptocurrencies are specifically built for making anonymous transactions that cannot be traced. And their blockchains are such that you can, for example, confirm that a transaction has been done, but you can never really tell who was responsible for the transaction. And depending on how complex the privacy features are, you can't even tell how much was sent unless you are a party to the transaction. The reason why I'm pointing out privacy coins is that there may be debates where you need to differentiate between regular native cryptocurrencies and privacy coins. And the reason being that privacy coins have specific unique features that makes them peculiar when it comes to things like regulation, adoption, and just like the impacts they have on society. So sometimes you want to separate that. I think the second thing then would be utility tokens that are built on top of other blockchains, but they are also just like native cryptocurrencies. It's just that they're not built on their own blockchains and they are an extension of a particular utility on the blockchain. So for example, there's Uniswap, which is a token for a platform on Ethereum, right? And what that basically means is that the utility of that token is specific to the Uniswap ecosystem, which is a smaller ecosystem on top of another blockchain. There isn't a lot of peculiarity or any special stuff that you may need to deal with when it comes to debating cryptocurrencies, when it comes to utility cryptocurrencies. But I just wanted to point that out just in case you ever meet a motion where it's about utility cryptocurrencies and it's about cryptocurrencies that have a niche utility and a specific confined ecosystem for you to engage with them. Then this probably is everyone's favorite, meme coins, right? Everyone has seen or heard about meme coins lately, thanks to Elon Musk and a couple of other people who are pumping their bags. So these are community-driven tokens with viral branding and humor, and obviously it's speculative in value. So meme coins never start off with utility. Meme coins exist as a piece of internet culture. So if I said something funny in this video and some debater somewhere made a clip of it and put it on TikTok and it started trending, we could make a meme coin out of it tomorrow morning. It's not even difficult to make meme coins anymore because there are meme coin launch pads. For example, pump.fun on Solana, where an average person can make a meme coin, right? So meme coins, really interesting. We are separating them from native cryptocurrencies because there isn't any specific utility. It's just a means of internet culture, also a speculative instrument. Can people have utility or add use cases to meme coins? Of course, right? So for example, Trump had a meme coin and rumor has it that people that have that meme coin can meet Trump, have a dinner with Trump if they own a substantial amount of the meme coin. Not sure if it's rumors. I think the meetings did happen. I'm not sure. I stopped following because I was not really happy about a president making meme coins, but that's a conversation that would have later on, right? So that's an example of a use case. So I can create a meme coin and say everybody that has the meme coin can attend special debate classes for me. But point is like the main aim of a meme coin is to create cryptocurrencies around a viral internet brand, get some humor going, get some culture going. And that's why we have meme coins. The next thing then is stable coins. Stable coins are cryptocurrencies that are pegged to stable assets. So native cryptocurrencies and meme coins are volatile, but stable coins are not. They are not volatile because a proper stable coin, and this is important, a proper stable coin is pegged to a real world asset, and there are records of the connection between the stable coin and the real world asset. There are people that claim to have stable coins that aren't really stable coins because there isn't any proper connection between the stable coin and the real world asset. And I'm pointing this out because if you start reading about crypto, you'd realize that there have been instances where some stable coins have collapsed. But for the purposes of debates, if you see a motion that talks about stable coins, please assume it's the best form of stable coins like Theta USD or Circle USD, which we call USDT and USDC. Those are the kind of stable coins that I believe CAP members would want to talk about, not the ones that depeg when a stable coin falls or goes in a different direction in terms of value compared to its real world assets, the real world asset that's supposed to be pegged to. We call it depeg, right? So it's depeg, right? So you need to make sure that in debates you are grounded and you're having debates about real stable coins. Real stable coins, no volatility. You have a USDC, it's always equal to $1. You can always claim it. And we're going to have a quick conversation about whether these things are even cryptocurrencies to begin with, or whether they are just representations of traditional currencies in the crypto world. Then the elephant in the room, the black sheep of cryptocurrencies, central bank digital currencies, CBDCs. You would see motions about CBDCs too because it's a very big deal. There are very important considerations to be made about them, and we'll get into that shortly. These are government-issued digital money using blockchain-like tech, but controlled centrally. So remember that at the beginning, we said the blockchain is not controlled by a central authority. You could deploy private blockchains that are closed off to the public and can only be accessed by the powers that be or people who should have access to it. And that's what central bank digital currencies are doing. So they are leveraging the blockchain technology that was invented. Someone is calling my Telegram. Give me a sec. So sorry about that. I did not anticipate someone calling me on Telegram on my PC, but yeah, I put my notifications off. Hopefully that helps. So as I was saying, this has become a big deal because you have big countries like China exploring the deployment of central bank currencies, digital currencies. You have Nigeria with the e-Naira. You have the digital euro, which is being piloted. Ghana, where I come from, has the ECD. They've been talking about it for so long. I wonder when it will ever go out. But yeah, these countries claim they are working on it, right? So let's get into some important, should I say, thing that you should know for framing, right? When you see a motion that says cryptocurrencies, what do you talk about? I strongly believe that when a motion talks about cryptocurrencies, it's talking about cryptocurrencies in its purest form, unless specified. It's talking about Bitcoin, Ethereum, Solana, meme coins, all the speculative versions of cryptocurrencies that are based on open blockchains that everybody can see, the cryptocurrencies that could make people rich or make people poor, the cryptocurrencies that people are saving and investing in, the cryptocurrencies that people are using as a means of payment. I don't, because then it becomes traditional currencies versus digital copies of traditional currencies, or like you kind of have to juxtapose between your everyday local currency and a version of your local currency on the internet. I don't think that that's what the debate is about. So when you see cryptocurrencies, it's not about stable coins. People try to squirrel the motion because they are in positions. For example, they're in a position where they're supposed to defend the volatile nature of cryptocurrencies. And instead of like just attacking the debate as they should, they start the debate by saying, oh, in this debate, we want to talk about stable coins. We think that these debates exist in a world where these people are using stable coins. That can't be the debate. A debate where we are talking about the growth or the rise of retail investors or investment apps that promotes assets like cryptocurrencies. You can't pretend that the debate is about stable coins. It really bothers me when people try to do that. Sometimes people don't even pretend at the beginning, but then they use stable coins as a mitigation to respond to cases around volatility. I don't think that's fair. I don't think that's a good way to go about it. The whole reason why a lot of cryptocurrency debates happen is because of the nature of native cryptocurrencies and the nature of cryptocurrencies like meme coins. Some motions may specify that it's just about meme coins or stable coins or privacy coins, but it's important that I clarify that for people who want to do well in debates about cryptocurrencies. What about central bank cryptocurrencies? I don't think that if somebody says crypto in a motion or cryptocurrencies, they're referring to CBDCs. If they want to talk about CBDCs, they'll talk about CBDCs specifically. It's also very weird if you want to make the debate about CBDCs when it's just generally saying cryptocurrencies, because CBDCs are not really used. A lot of them they're going to say would be inherently very speculative. You're going to have very little matter and information to deal with. And I don't think you want to do that in a debate where the scope is broad and it's talking about cryptocurrencies. So you can see I put green check marks next to these two types of cryptocurrencies, and I put red X's next to these other types, just to make sure that people are not mistaking what cryptocurrency motions are generally about. Okay, so principles behind the creation of Bitcoin. And the reason why we are going to go through these principles is that you are going to realize very soon that every technology that is created has a strong philosophical backing. A lot of the people who are behind the creation and the ideation of technologies are philosophers at heart, or are probably philosophers themselves who have just read through a lot of philosophy. And I may be getting ahead of what I plan to talk about, but for example, with AI, a lot of philosophy in the past has engaged with the conversation of AI. You have books like The Foundation back then talking about machines and robots, right? So a lot of what you're going to see when we talk about technology and principles would be principles that have existed in other parts of our lives that are being brought into our lives again through these technologies, right? So let's start with the principles behind the creation of Bitcoin. Decentralization. The idea is that power should not sit in the hands of one government or company, and networks should be governed by communities and not authorities. The idea here comes from a couple of things. One of the things that you would note about Bitcoin is the Bitcoin white paper, which explains the technology behind Bitcoin and the rationale behind Bitcoin. And it's also the source of the principles that I'm talking to you about. That's a good job to critique the current financial system and explain what is wrong with the current financial system. It points out the role of banks and the Federal Reserve in the US during the 2008 financial crisis, and why we need to decouple our financial freedom, our financial capabilities as a society from a centralized group that can do whatever they want, whenever they want to, without really taking into consideration what the people want. I think one example that I have seen people use, which I have used a few times, is, has anyone ever seen a situation where the leader of the central bank, the governor of the central bank of a country, the appointment of the governor of the central bank of a country was rejected? in most instances, it never makes the news when the appointment is happening, or even if it does, it's never a big deal. In some countries, it requires parliamentary approval. It's usually approved nonetheless. There's very little spotlight thrown on governors of central banks. But if you know the power of the central bank, the governor of the central bank is such an important role, an important responsibility, that the mere fact that there isn't enough conversation about it just shows how removed the society and community is from how their money is managed and who manages their money. And with cryptocurrencies, with the creation of Bitcoin, the idea was we want everyone to manage it. So the conversation then becomes, how does this happen with crypto? Because sounds very idealistic. The way this principle is practiced is that everybody anywhere in the world can be a miner. And being a miner, as I already explained, involves putting together gadgets, internet, some time to set it up, and then paying for electricity. You let your miner run and your miner contributes to the Bitcoin network. Everybody that owns a miner has a shared ownership of the Bitcoin network, such that every time there's a big change that needs to happen on the technological level, all Bitcoin miners must agree to that change before that change is enacted. And so in instances where the Bitcoin miners, the majority of them don't agree, whatever that change is never ends up becoming Bitcoin. It can become something else, but it will never be Bitcoin, right? So we've had instances where people suggested some changes that weren't accepted for some cryptocurrencies, and the main cryptocurrency continued. Other people created offshoots, but they never got the same traction. And in most instances, most of the people who are voting are egalitarian, are trying to follow these principles, so it leads to good outcomes. But then again, it's more democratic. I mean, democratic decisions don't always end right, but the fact that they're democratic feeds into the principle of decentralization, right? So the next thing then is trustlessness, right? So transactions should not require faith in intermediaries, but it should be based on transparent code. So you're going to hear this term a lot when you begin to read about crypto. You're going to hear, don't trust, but verify. Code is truth, you can trust code. What this means is, I don't have to believe that a transaction has happened because my bank says so. I can just look on the internet, check a blockchain, check if the math checks out, and I can tell that a transaction has happened, right? Once again, that also feeds into moving away from centralized organizations and making it something that everyone can participate in. Then we move on to transparency, right? So this is important because in most instances, the movement of money, especially when it comes to money that belongs to the people, happens behind closed doors. It's very difficult to track. With blockchain and Bitcoin, countries can put their budgets online and people can see where the money goes and who was paid. They would probably never do that, but that's just an example of how this principle can happen in real life. Censorship resistance, right? So no one should be able to block or freeze your money, financial freedom as speech. I think it's important that people begin to understand this, and I'll show you how I used some of these things in debate soon. But during one of the protests in Canada, PayPal accounts belonging to protesters were frozen. In Nigeria, during the NSAS protest, bank accounts belonging to protesters were frozen. They had to use Bitcoin as the means of fundraising to support their cause. And this is just one example of why this principle exists and how this principle can be applied. Scarcity. The idea is that money itself should mimic gold, and the traditional currencies we have failed, even though people claim that it's backed by gold reserves and whatnot at the beginning. People are printing way more money than the reserves that they have, and scarcity is what leads to the value of currencies. And so it's important for money to be scarce. That's one of the principles behind Bitcoin. Peer-to-peer exchange, simple. People should be able to transact directly without middlemen. Once again, moving away from centralized organizations. And open source ethos, which suggests that anyone can audit or improve the code. A lot of these cryptocurrencies are being built on GitHub, which means that people can go in there, copy the code and build their own cryptocurrencies, or add to the code in order to ensure that these cryptocurrencies are more secure and are in a better place. It also means that things like security issues are usually caught easier because it's been built in the open, everyone can see it. But it also then means that people can take advantage of security issues that are not being caught on early enough, and you've seen a lot of hacks in the cryptocurrency ecosystem. So this principle in and of itself, all the principles like have their bad sides, right? But why did we go through all of these principles? Because the principles behind the creation of Bitcoin are principles you can run in debates about cryptocurrencies. These are the foundations for which cryptocurrency was built and cryptocurrency was created. The first cryptocurrency being Bitcoin was built around these foundations. What this then means is that these are the principles that guide the idea of what crypto ought to be. Whether all cryptocurrencies or crypto is that right now is a conversation that could happen in a debate. But the point here is these are the principles that you could run in a debate about cryptocurrencies. Have I ever used them? Yes. There is a debate from PUDC 2022. I was in opening opposition, round 4. The motion was this house prefers a cashless society. And in that round, we were up. So what we did was we ran a case on money as a means of expression based on the censorship resistance principle, where we argued that we do not want a cashless society because the most likely adoption of a cashless society or creation of a cashless society would be one where we are going to be using central bank digital currencies and not cryptocurrencies. And we explained the rationale behind it, largely because if the state really wants everything to become cashless, they also need to have some control. It would just be a copy and paste of our traditional currencies being put online as central bank digital currencies, and that's what would be used. Cryptocurrencies would be less popular or would still probably be a speculative instrument, but they wouldn't be a legal tender. Why were we concerned about this? We felt that a cashless society was more dangerous because it's easier to censor people's expression. If all of us are trading on one big ledger controlled by the states could then use that as a means to control people's ability to spend, ability to support, ability to do a lot of things. And that's part of our case. We ran a case on censorship resistance and money as a means of expression. And that particular concept came from the ethos of Bitcoin and why Bitcoin exists to begin with. So the reason why I went through all of these principles is just to give you an idea of why Bitcoin was created and how to deal with principles in debates around cryptocurrencies. All right. So how big is crypto? Pretty huge, not as big as social media and as big as AI, but it currently has a market size of over 2.6 trillion. At the time that I was putting the notes together, we've seen crypto reach 4 trillion market capitalization in recent times. Bitcoin dominance is around 50%. So in terms of the market capitalization, the value of the cryptocurrency ecosystem, Bitcoin usually is around 50% to 40%. I don't think it has really fallen down that a lot. With over 80 to 100 billion being traded in cryptocurrencies every day. It's probably more now because there are more speculative instruments than actively trading cryptocurrencies directly. So it's getting really, really intense when it comes to trading Bitcoin. And then number of cryptocurrencies over 12,000. It's probably even over 20 every day. I'd honestly say it's probably infinite, right? So top countries, USA, India, Nigeria, Vietnam, Philippines, El Salvador, South Korea, and Singapore. The reason why I pointed this out and I put this on the slides is just to make you understand that cryptocurrency and its usage extends across various countries and different markets. So you have emerging markets and already developed countries and developed markets also having cryptocurrency being a very important part of their financial ecosystem or being so popular. And we're going to get into why people from these countries are probably excited about crypto when we get into who the stakeholders are. So let's get into the stakeholders, shall we? So first off, we have developers/projects. Why are we going through the stakeholders? I think it's always important for us to understand who the stakeholders are, just because it then makes it easier for everyone to have a good debate. Because if we know who the stakeholders are and we understand what they want and why they are doing it, then it makes it easier for you to have a good debate, because when you see the clash, how this impacts the various stakeholders and how certain stakeholders would react to certain decisions being made around these specific industries. So developers and projects, they build blockchain protocols and applications. I think it's important for you to understand that besides Satoshi Nakamoto, who built Bitcoin and vanished, cryptocurrency developers who built them, most of them don't vanish these days. And I nearly said they don't vanish, but we have people doing meme coins that are scams who vanish, but proper cryptocurrency projects don't vanish. For example, Ethereum, the second biggest cryptocurrency, one of the founders is called Vitalik Buterin, and he is a celebrity in the tech world. He's seen as one of the biggest tech brains. Countries call him to talk to him, have conversations with him. And the reason why I'm pointing this out is building a cryptocurrency is just like starting a startup. Building a cryptocurrency is just now like starting a tech project or a tech company. If your cryptocurrency does well as a developer, you end up making money, you end up making profits, you end up getting a lot of investments. It's a venture that people get into intentionally. So it's important that people start thinking about cryptocurrency developers and projects, just as they think of the founders of Snapchat, right? They are all in it for the business. The thing here is for these cryptocurrencies, the ethos and the rationale and the utility behind them differ, right? So with Ethereum, which is the second biggest cryptocurrency, the idea is to create a very different means through which people engage with the internet. And that's where they introduce the idea of smart contracts, where people don't have to spend a lot of time enforcing rules around payments or enforcing rules around digital transactions. So for example, you can just create a smart contract that says, if Elisha does a video, uploads it on this platform, and the video reaches 1,000 views, send Elisha $50 and have it automated to the Ethereum blockchain. That's one of the use cases of the smart contracts. There are multiple use cases of smart contracts. I don't really want to get very technical, like I said, but Ethereum is getting a lot of traction. That traction creates revenue for the Ethereum blockchain. The revenue goes to the Ethereum Foundation and other things in the Ethereum ecosystem. But point is, you can build a blockchain project, a blockchain or cryptocurrency, and make money from it, right? Users. So we have everyday participants who send, hold, and spend crypto. They represent the adoption of cryptocurrencies. So multiple examples. In Ghana and Nigeria, we are sending money across borders, Ghana, Nigeria, Ghana, USA, USA, Nigeria, through cryptocurrencies. We are using stable coins because it's more stable. Some people are also using some of the volatile cryptocurrencies like Ethereum, Solana, and Bitcoin for various reasons. But point is, people are using cryptocurrencies for multiple reasons these days. And that user base is growing extensively in a way that has created some strong communities that sometimes may seem like cults, right? Then we have retail investors, your average Uber driver who is looking at their cryptocurrency charts at every traffic stop, at every traffic light, because they bought a meme coin and they're waiting for the meme coin to go up. These retail investors are also speculating around stocks on apps like Robinhood, and are just trying to get rich. We have institutional investors, hedge funds, corporations, and ETFs. They are bringing in a lot of money. They're also trying to make money. But most importantly, they're also trying to signal to people who invest through them that they are hip, they are cool, they're exploring new ways of investing, and they are going to make money for their investors, like the people that invest through them. I think it's important for you to know that there's a strong relationship between a lot of developers or projects and institutional investors these days. A lot of good projects have institutional investors working with them directly, making sure that the projects are going well so they can also make money. Retail investors and users engage with projects on social media. The main social media platforms are Twitter and Discord. Twitter and Discord. So on Discord, you have cryptocurrency communities. On Twitter, we call something CT, which is crypto Twitter. Right now, CX, which is crypto X. Not as cool, but that's what it is, right? Then we have businesses built around cryptocurrencies. And the reason why I put them here is that beyond the cryptocurrency, the coin, you have big companies like Binance and Coinbase, NFT marketplaces where people can buy and sell NFTs, who are also important players. If you've been reading the news, you know that the former CEO and founder of Binance was pardoned by Trump. He was accused of some financial crimes and was convicted, but he was pardoned. And all of these things are interesting because they play into different narratives and different important stories that we'll talk about later on. But it's just an example of how important these exchanges and businesses are and how they also play a role in the crypto space. So what's their role? They provide infrastructure. People need wallets. People need places to buy and sell crypto. These companies build those platforms. Nation states, you have adopters like El Salvador. El Salvador has a Bitcoin reserve. To countries like China that have banned Bitcoin 1 billion times. That's exaggerated, but they banned Bitcoin quite a bit. There was a joke around like 2016 to like 2022. Will Bitcoin be banned in China today? And it was happening a lot, right? So these nation states are responsible for the legalization, the taxation, and the monetary integration, basically the high-level regulation of cryptocurrencies. Then we also have regulators, which sometimes would involve specific actors in a country. In the United States of America, in Nigeria, and Ghana, and in a lot of places, the Securities and Exchanges Commission is one of the regulators that decide how cryptocurrencies are treated. Do we treat them as a commodity? Do we treat them as money? Or do we treat them as digital assets? So there are multiple ways people are describing cryptocurrencies, and the nature of the description influences things like taxation, the legalization, and the kinds of licenses that businesses, exchanges, or ecosystem service providers would get as a result of what the regulators decided. The Federal Reserve would play a role. You have the central bank of multiple countries being directly responsible for the regulation of cryptocurrencies. So that's it for the stakeholders. Let's get into why we have crypto motions. In most instances, crypto motions are blending economics, ethics, governance, and technology. So it makes it very interesting. It's also great to test how we want to discuss risk versus innovation, individual liberty versus collective stability, because sometimes people are going to make money and we are going to give people the ability to be financially free, but the whole cryptocurrency ecosystem or industry may be bad for specific countries or specific economies, and that's a conversation that we need to have. Sometimes it's also a pure crypto motion, like this house believes that states should adopt Bitcoin as a legal tender, or it's a finance motion that has strong crypto elements, like this house regrets the rise of retail trading apps. I really love that EUDC round. I don't recall, but semifinals, EUDC 2022 or 2023, it's one of my favorite rounds, largely because it has a lot of crypto elements, even though it's not an obvious crypto debate. Okay, so let's get into some broader impact or reward issues, right? And these are things that you would need to discuss the impact of cryptocurrencies in debates. So, for example, it's interesting to always ask yourself, what does Bitcoin mean, or what does crypto mean for global economies? What does it mean for monetary policy, banking systems, and capital flows? For monetary policy, if you make Bitcoin a legal tender, you don't control how Bitcoin is produced. You can't cap transactions on Bitcoin to a certain amount. You can't print new Bitcoin. You can't control how people spend their Bitcoin like you can control things on your end. So for both like fiscal and monetary policy, you are unable to do all of those things. What does that mean for your economy? And sometimes you don't even have to make it a legal tender for it to disrupt your economy. It just has to become popular. So in Nigeria, one of the reasons why the central bank got very angry at cryptocurrencies is that cryptocurrency exchanges and markets and the trading of cryptocurrencies created an alternative black market for the trading of the Nigerian naira. So what this then meant was that the central bank was trying to keep the dollar to Nigeria exchange rate at a particular range, which didn't make sense. Central banks tend to do that a lot in an attempt to hide poor economic indicators. But on the cryptocurrency exchanges, the naira and the dollar rates was just flying, right? And it pissed the Nigerian regulators off so much that they started clamping down. It's one of the many reasons why they started clamping down on cryptocurrency exchanges. So they never really adopted cryptocurrency, but the popularity of cryptocurrency affected them. And that's an important impact for you to know. On the positive side, if it's a national strategy or it's a strategy that becomes popular, and for example, it's a developing country with a bad currency, you are able to hedge against inflation by storing a lot of Bitcoins or storing a lot of good cryptocurrencies that have long-term value and long-term utility, right? It also could make it easier for capital to flow into your country, depending on how you look at it. If the capital flows into your country through crypto and people have to exchange it and buy stuff, or even people have to use it as a means of payment, it does increase things like purchasing power, because sometimes there isn't enough capital flowing into your country because the banking rails are just not great. It's more difficult, it's more expensive. And for countries that have a GDP that is heavily backed by remittance, it's important for people sending money to be able to send money at a lower cost, but also importantly, for people receiving it to receive it at a lower cost, because then it means they have more money to spend. All right, let's get into the next one, which is it enables new forms of work like DeFi, DAOs, NFT, and speculation. So people can make money from crypto. They can speculate. I have speculated on crypto a few times. I did speculate on crypto today. I lost money, if you are wondering. NFTs, non-fungible tokens, became or have become a representation of digital art, where artists who could only sell physical copies of their art are now selling digital versions of their art. This has even moved away from paintings and nice drawings to video, audio content, and people are finding new ways to develop NFTs. There's something called decentralized autonomous organizations, DAOs, right? So this is a new framework for governance where everybody that owns a token or owns a cryptocurrency is part of a big company. We don't call it companies, we call it DAOs, but just for illustration's sake, company. And the company has a treasury, has money, cryptocurrencies, and the company comes together to decide how this treasury is spent in a way that increases revenue for the DAO and increases the value of the token that is at the foundation of the DAO. So that's another way people are doing things. There's also decentralized finance, really interesting aspect of crypto. Basically, it's disrupting banks. What this means is better loans, using cryptocurrency as collateral, new forms of saving money and earning what we call yield. So yield here being the ROI after saving or investing on these DeFi platforms. And the ROI of most DeFi platforms are far better than banks. But the sustainability of these ROIs and yield is also another conversation. So there's a conversation of whether these numbers that are displayed on the screen are sustainable, and the means to which they are acquired can sometimes be dangerous. So you would notice that in the past, we've had DeFi platforms that have collapsed because the founders were too ambitious. They were trying to get everybody too much return on interest, and they failed. The next thing then would be politics, right? It fuels anti-establishment narratives and financial sovereignty, both internally and externally. So internally, all of us can say, screw you, government. We are going to start saving in crypto. Governments may not like that, but it's not always about what the government likes. Is it good for people in countries like Ghana to hedge against inflation through crypto, right? Yes, because why save in the currency that would die and would only get worse? But it also presents for a very important geopolitical conversation. What is that geopolitical conversation? Externally, there are anti-establishment narratives from countries like El Salvador and other countries who are beginning to think that we need to drop the use of the dollar as the main settlement currency for global trade and adopt cryptocurrencies or adopt Bitcoin as the main means of trading globally. Also, you are seeing countries move from having a dollar reserve to having a Bitcoin reserve, like El Salvador. Currently, even the United States of America is talking about a Bitcoin reserve. It's one of the biggest conversations around making Bitcoin, USA, a crypto capital of the world. And so the anti-establishment narrative is not just about internal politics, it's also about external politics and how people are responding to their partners across the globe and the power that certain countries have gotten over the use of their currencies over a long period of time. The environment, there's a conversation about sustainability and how Bitcoin and other proof of work cryptocurrencies impact the environment. The idea is if they become so popular, everybody starts mining. It's not environmentally friendly. It's bad for the environment and whatnot. I just want to say, and this may be a very interesting thing to say, controversial, but I don't think this is important, to be very honest. And I want to clarify. We need to save the environment. Climate change is real. Global warming is real. This is not where that conversation is coming from. This conversation is coming from the idea that there could be sustainable means of doing this, and that can easily be encouraged. And it simply cancels out the issue of environmental sustainability, because on the other hand, things like banking and other kinds of financial rails also do use lots of electricity. And I don't think the conversation here is about the use of electricity, but the source of electricity. I think because, and the mitigation even gets far more in depth when you point out that because of things like regulatory oversight and the fact that countries may not always be friendly to Bitcoin, a lot of people do not connect to the national grid when they're mining Bitcoin. Why? Because they don't want the national grid to just take them off. And because the country hates Bitcoin and doesn't want Bitcoin to get popular, right? So a lot of people are building mining farms in farmlands and like the outskirts of society in various parts of the world, China, USA, and they're using solar panels. So that environmental conversation, I honestly don't think it's a good one to have in a debate. I think it kind of isn't the biggest issue that we need to deal with in a debate. At this point, I'll pause and take a few questions if anyone has any. I'd also be drinking some water. So if anyone has a question, please let me know.
Hi, Elisha. I have a question.
Yes, go ahead.
Okay, so giving a lot of the things that you're explaining, they seem very technical and information that isn't a bit available to the average intelligent voter. Given that judges are required to judge as average intelligent voters, I am wondering how we could properly run these mechanisms in explaining. So, for example, like some of the things you mentioned concerning the extra economies that the crypto world creates, or the specific way that blockchain works, are things that are very important to explain some of the principles or the economic arguments that someone would want to run in a debate. But those things are not readily available information to every intelligent voter. How do you use that in the debates then?
Yeah, I see the issue. I think one of the biggest things I have encountered doing cryptocurrency motions is that it's two things. Either the speakers themselves are uninformed or the speakers are just flat out lying. And like, I don't know, they're just trying to win the debate. I think the way you want to go about this when you're debating is you look at real world impacts, real world issues that matter to the average intelligence voter. That becomes your conclusion. And then you work out the easiest explanation possible from the start of your case to a conclusion that makes sense in the real world outside of crypto. So what do I mean by this? For example, you are doing a debate on the motion here. This house regrets the rise of retail trading apps, right? And you are arguing that it's okay and it's good to have an instrument that allows a financial instrument that allows people to speculate and potentially make money in the long run. So you want to point out that giving retail investors the same institutional and accredited investors have is important for financial freedom and it's important for the equalization of financial opportunities for people. I think even though you explain all cryptocurrencies work, how people are like to need, and why that is a conclusion. This is people don't have people to make money, and for the vast majority of people, we never do that to a 9 to 5, and that is a risk that they would be taking every day anyway. But with crypto, they are taking a risk. They may do 300,000 trades, and one of those trades substantial amount of money. It could be life changing, it may not be life changing, but they are economically to an extent. And I think that is a unique utility and a unique benefit for society that of financial instruments do not have, that makes cryptocurrency unique and important. I think at that point, you want to start weighing why that is important to the average person and why that is important to an individual. So I think for cryptocurrency motions and motions that have a lot of technical jargons and technical conversations, your conclusions at the end of the debate must be important and must also be very easy for an average person to understand. They must be conclusions that are just true for society. Like society wants to see more people make more money, right? Let's take another example. For example, the conversation about the principles, right? I don't think society wants to see a world where money can be frozen based on the whims and caprices of some dictator or some president who doesn't like a certain group of people. And the fact that there have been multiple instances where this has happened even in democracies is exactly the problem. If your conclusion here is that Bitcoin or cryptocurrencies are important because they're censorship resistant, that conclusion is something that can resonate with an average intelligent voter. I think at this point, they would be listening to test the logic between the technology and the technological explanations that you have provided as against the conclusion that you're making. And I think that's where, like, sometimes some judges may suffer, but things like this should also help even judges figure it out. Okay, I hope this helps. We're going to talk about key clashes too, so hopefully that also helps. But yeah, does anybody have any more questions? Or I could just go to the key clashes quickly and then I'll take one more, two questions on crypto, then we get into social media. All right. So decentralization versus regulation, the conversation is crypto is decentralized. To what extent should the state regulate cryptocurrency? Should there be any regulation at all? Do we leave crypto to be its own thing in the corner? And these are conversations that are not just being had by people who are outside the cryptocurrency industry, but there are conversations also being had by people inside the cryptocurrency industry. The dilemma here is if you invite regulation, you go against the ethos of crypto that I already spoke about, but also the regulation means that there's more adoption, because if you are friends with governments, they are more likely to give more licenses to exchanges and businesses built around cryptocurrencies to run inside their country, which is amazing for adoption, which is good for your revenue as a developer. So right now, it's like a very interesting conversation for end users and for states. Regulation just means more control. Some states also claim that they are doing the regulation because they want to protect the average investor and the retail investor. So it's really a very broad conversation because the regulation does not even just so I think the other thing here, and just to clarify, the regulation when it comes to cryptocurrencies is not that states will take over a cryptocurrency. And I think I need to clarify what that regulation looks like. The regulation usually looks like creating systems that would allow states to track and attempt to tie transactions and activities on the blockchain to specific identities. So how does this work? Binance is a cryptocurrency exchange. Bitcoin is a cryptocurrency. Bitcoin has a blockchain called the Bitcoin blockchain, and you can check the Bitcoin blockchain to see transactions. The way the states can create some regulation that allows them to track how much Bitcoin I have is not by taking over Bitcoin, because the states can never do that. What would the states do? The state would create regulations in Ghana that says that for every cryptocurrency exchange that operates in Ghana, they must do KYC and AML stuff. So know your customer registration, where they collect my name, my passport details, my location, my phone number. AML, anti-money laundering stuff, they should flag transactions that are huge, transactions that don't make sense, or transactions that meet a certain criteria, and investigate these transactions. What this basically then means is that because my identity is tied to my Binance account, you can infer and make a conclusion that if every 30th or last day of the month, Elisha receives money in his Binance account and sends some to a particular Bitcoin wallet, then that must be Elisha's Bitcoin wallet, or if not anything at all, Elisha is related to that Bitcoin wallet one way or another. That's one aspect of the regulation, but that's where you get the data to find out who is doing transactions that are problematic. Taxation. You can't tax my Bitcoin transaction that happens on the blockchain. You just don't have the capacity to do that, right? What that then means is that the states would partner with Binance and other platforms such that every time I sell Bitcoin for Ghana cedis, they would place a tax on that transaction that Binance would send to the states, or they can just do it such a way that they create a blanket tax mechanism for everybody based on how much profit you make in crypto and how much crypto you transact. And they're just going to allow you to self-report, but they can always investigate whether you are being honest or lying based on the data they've already collected. Remember, I said they take your passports, they can see transactions now, because every time you use centralized exchanges or these centralized platforms or businesses, your identity is tied to these platforms, right? So that's how the regulation works. That's just another way you can regulate. What they can also do is, through these platforms, they can regulate how much people can on these platforms. So for example, you can say, we don't want anyone exchanging more than 20,000 Ghana cedis for Bitcoin in a day. So now all of these businesses must comply, because they are businesses operating in your country. They are not cryptocurrencies themselves. They have staff who can be arrested, who can be charged. That's how come the Binance CEO was charged in the US. Nigeria detained Binance workers for months because they felt that Binance had gone against some regulations. So all of these things are a risk for these companies, and they're more likely to comply with regulations because it makes it easier for them to operate. So that's how the regulation works. It's not that someone is going to take like Bitcoin and own it, and that's not how it works. So that also then means that the regulation isn't as clear cut as people make it seem. But obviously, like for the purposes of a debate, I think it's usually best to just assume that these regulations can do the bare minimum, like track who is spending what, taxation, etc. Don't make the debates too weird. Just like assume feasibility on the regulation side, and then you can have a conversation on what that means, like in most instances, and what that would mean in terms of impact. Then we can also talk about financial freedom versus financial security. If people's attempts to get financial freedom, do they get taken advantage of in a way that takes away their financial security? I think that also kind of links to regulation, but the conversation here is about, are more people more likely to make money? Are people likely to make money? Is the risk worth it? If people make the money, if some people make money, a lot of people lose money, should we be allowing this to happen in the first place? Is this a moral bad? Like people, is it a Ponzi scheme? Are people profiting off other people's losses? And the reason why it ties to regulation here then becomes conversations around things like influencers, right? And people who are promoting cryptocurrency on the internet. I make cryptocurrency content. Sometimes you're making cryptocurrency content that requires you to say that a certain cryptocurrency is a good investment. Do you create a disclaimer that says this is not investment advice? Is that enough? Do we just ban the creation of cryptocurrency content where people are mentioning specific cryptocurrencies and are saying that they are good? Is there a world where people are not really making an informed choice, are not really consenting to trading cryptocurrencies properly because they are being led there by influencers? We've seen a lot of non-cryptocurrency influencers create cryptocurrencies, from the Guan Po to the Hokata girl. I've forgotten her name, but Hoktoa, right? So yeah, she created a cryptocurrency. It was a bloodbath. Everybody that bought that cryptocurrency lost money. That's an example of what's happening. The environmental impact, I've shared my thoughts on it. I don't think it's a good idea to have these cases in a debate. Also, another mitigation is right now, some cryptocurrencies don't use proof of work. They use proof of stake, which means that you don't really need a lot of computational energy to contribute to the network, which then means that the amount of electricity that is used is less. The second biggest cryptocurrency, Ethereum, uses proof of stake and not proof of work. Proof of work is where the environmental conversation usually happens. Proof of stake, you don't need a lot of computational power, so you don't need a lot of electricity. Just trying to break it down so it doesn't sound so technical. What that then inherently means is that the environmental clash isn't really a big one. I put it there anyway because people talk about it. Adoption and inequality. What does the adoption of cryptocurrency mean for developing countries? Does this boost their economies? But then the speculative nature could also cause other problems, legitimacy and scams, like the cryptocurrency ecosystem has an identity problem, and the fact that the vast majority of cryptocurrencies could be scams because not all of them are being built by reputable builders or reputable developers who are trying to make a living and are looking at the long term. Do we just then scrap all of crypto, ban all of it because of that, or do we just keep it? Stable coins versus CBDCs. With the existence of stable coins, do we need CBDCs? Or with CBDCs coming up, should stable coins be retired, or should we ban stable coins? So there are interesting debate motions I have seen these days where people are saying flat out ban stable coins, largely because since they are an extension of the legal tender but not controlled by the states, it presents certain risks that shouldn't be allowed or shouldn't be welcomed by states. But then again, coins also allow countries to exercise soft power because the US dollar stable coins are very popular across the world, which only helps the US exercise its soft power and its economic power across the world without actively even having to do anything. It bypasses all state regulations. bypasses bilateral, multilateral agreements, and allows the average person to just have access to US dollars. So for example, I save in stable coins while I'm in Ghana. In Ghana, if I wanted to save money in the bank, should I be saying this? I wanted to save money in the bank and I wanted to save in US dollars. There's a high threshold for getting a US dollar account. You can't withdraw dollars unless you are traveling, unless you have a ticket in hand and you can show it to the bank that you're traveling. You don't get to withdraw dollars at the bank. What this inherently then means is that stable coins, even though they may not be controlled by the government, do present an opportunity for the state. But then there's a conversation about CBDCs, monetary policy, fiscal policy. Which one do you prefer? There's also some systematic risk with stable coins and the fact that these are being run by third parties. Can they be trusted? Can they not be trusted? That's another conversation. Privacy versus compliance. To what extent do we allow cryptocurrencies to be private? To what extent do we allow certain privacy-centric tools? So there have been some privacy-centric tools that have caused a lot of chaos in the last couple of months. People were arrested in the US and charged with fraud and funding terrorist activity because they created privacy tools called mixers. What is a mixer? A mixer, like the word suggests, mixes transactions. So what that means is if I want to send 1 Bitcoin to someone, right? The mixer will take the 1 Bitcoin, send the 1 Bitcoin to a billion not a billion, multiple wallets. Sorry about the exaggeration, multiple wallets. And then from that, it will send it to the final destination. What this means is that for you to track, you're going to have to spend a lot of computational power, and they do it in such a way that you can't even really tell where the money came from and where the money went. They split the money across multiple wallets. They split it into various small amounts of Bitcoin, put it all back, split it again. It's a whole lot, right? So mixes exist, and then there are privacy cryptocurrencies that just make it inherently difficult for you to track. That's an issue on its own. Institutional involvement at the institutions dumping on retail. Dumping here means buying like cryptocurrencies, attracting people to buy to, and then dumping on them, right? Selling out all that you have and making the money and leaving the other investors in tears. And institutional investors and the developers of these cryptocurrencies in a marriage, or are they in bed? Are they screwing over retail investors? Something that you may want to check out is that DAT. It's called a digital assets treasury. It has become a very, very popular means for institutions to buy cryptocurrencies. And some people are sounding the alarm about that and are saying that some dATs are only a vehicle for institutions to dump on retail, right? There's also ETFs. You want to check that out. Then there's a conversation about making crypto a legal tender. Is that something that is necessary or not? And then there's also the conversation about making Bitcoin a reserve. If you want to read more about that, I think El Salvador is the best example. They are the biggest experiment. It's not going bad, so far so good, but it's also important for you to always consider the specific states that the debates are about and not just randomly apply El Salvador's situation to any other state when you're having a conversation about making crypto a legal tender. At this point, I'll pause and take questions before we move on to social media and AI. Okay, I assume there are no questions. So I will just move on to social media and AI. The thing with social media and AI is it's going to be pretty quick, largely because it's not as technical as crypto. So I know we are already about an hour, 30 minutes into it, but hopefully we should be done in another 30. Okay, so what is social media? Social media, online platforms that allow users to create, share, and engage content, and with communities. We are on social media because we want to communicate, we want to experience culture, we want to have an identity, right? There are different types of social media, and I think it's very important that people know this. The reason why it is important is people frame social media sometimes as one big, like, monolith. And I think it's not great, because breaking down the different types of social media, or recognizing where specific debates are happening in the social media ecosystem, puts you in a better place to run better arguments. So sometimes some debates are happening across various social media platforms, but there's a case that's specific for discussion networks like Reddit, Quora, and 4chan, right? And that could happen in political motions, where you're talking about QAnon, talking about various like echo chambers that exist among political commentators or people who are active in the political arena. On really quickly, social networking, X, Facebook, LinkedIn. I mean, you could say Instagram, Snapchat, TikTok are all forms of social networking, but you can also put them under photo sharing, Instagram, Snapchat, video, Locket, video sharing and streaming. You have TikTok, YouTube, Twitch, Instagram, and Snapchat. I think one of the things that we need to quickly understand, and this is one of the big issues about social media, and I see why people try to then bring it all together, is that the industry is very competitive and people are consolidating various features that exist elsewhere and bringing it into one platform. Everybody's trying to build what Elon Musk calls the everything app, where everything happens on one platform. So even though some of these may have started out as photo sharing, they've all, for example, started implementing things like streaming and video sharing. And I think it's important to also note the rationale behind this. Instagram only implemented the Snapchat features after Facebook wasn't able to buy Snapchat. And you realize the extent of competition and how toxic the social media industry can be in and of itself when we get into the stakeholders, right? Then discussion networks, Reddit, Quora, 4chan, social blogging, we have Medium, Substack. Some people still use Tumblr. I'm not sure why. That thing's dead. Social review, you have Yelp and TripAdvisor. Okay. So I think for most people, they know what these things are, but social review, Yelp, you go there, you go to a place, you go leave a Yelp, leave a review, tell us how amazing or how horrible it was. And that's like, I mean, one of the ways you can hold places accountable and make sure that they are doing the right thing. Okay, so let's get into the key stakeholders. We have the users, right? So with users, you have users, depending on how you're looking at it, being the products and the audience, right? So what this means is the number of users you have as a social media platform determines how big you are. So what are the metrics that we are looking at? We are looking at metrics like total number of users, total number of accounts, total number of active monthly users. So sometimes you hear that a certain social media platform is declining in users, and it's not because their main user base has fallen, but it's because their active monthly users have fallen. I don't know what's going on with Facebook right now, but I know at a point they had like some of their monthly, they had dip in their monthly users before Elon Musk bought Twitter. Twitter was struggling to retain users and didn't have a good number of active monthly users. I'm sorry, I'll be calling Twitter X, or sorry, I'll be calling X Twitter throughout this, but I mean X, just that old habits that I had. And the users go there for various things. They want to be entertained. They want to have fun, which is under entertainment. They want to share their thoughts. The users go there these days to also make money, because there's a rise of influencer gigs. There's a rise of content creation. So under the users, you also have content creators. And I think you can also separate like the average user who is consuming from the user who is creating content, right? Even though the content creator may consume some content themselves. So what they see is determined by algorithms, and the algorithm decides what they watch, what they like and share, what they are likely to like and share. But important issues around these stakeholders is their mental health, their privacy, their speech, and their agency. To what extent is social media exposing these individuals to content that makes them more depressed, that specifically invokes a kind of emotion in them that is negative? Some have indicated that Facebook has, probably because whistleblowers, it's an alleged issue, but enough research has been conducted that proves that Facebook and certain social media platforms may be actively putting violent and insightful content in front of users to create an emotional response that puts them in the position where they have to respond, they have to react. And that in and of itself is bad for the people, but it's good for the social media platforms because then it means they can retain you. They're likely to come back if you were angry yesterday and you're fighting with people on the right because you're on the left. And you're likely to also produce content that will piss people off if they're on the other side of the political spectrum. It means that you keep on coming to the social media platform, you keep on fighting. It's bad for your mental health, but it's good for the company. There are other examples of this. You also have privacy. Social media platforms are able to track you in ways that you can't imagine. They know what you like. So you can like a picture of a dog and they can show you an ad for a dog shelter. So there are conversations about how much data should they be allowed to track, how much data do we have control over, and can we stop them from tracking certain things at certain times. You've seen some work being done to prevent this not a lot by the social media platforms themselves, but you've had some other companies get into the conversation and try to stop some tracking from happening. And you've had some countries like the countries in the EU pass regulations that prevents certain kinds of data from being used when tracking. So an example of this would be Apple and the ability for everyone that owns a modern iPhone. I think iPhones that were created about 3-4 years ago can prevent social media platforms from tracking the user across other applications on their device. So what this means is that in the past, various social media platforms were sharing data. Not in the past, they probably still do. And what that meant is when I moved from Facebook to Twitter, Facebook can track what I do on Twitter. But now, if I'm doing, I'm moving on iOS, because I have disabled the ability for Facebook to track what I do on other apps, they can't really get information on what I'm doing on Twitter. They can't like put specific kinds of code that allow them to access that information in their app. Even if it is there, I said no, so it's disabled for me. It's pretty technical, but you get the point. We have platform/developers, the tech companies. As I said, anything in technology, the developer on the platform is building it to make money. They're either trying to get a lot of investments, become rich, and become popular. TikTok, for example, the founders made a lot of money, say for Snapchat. Instagram, they made a lot of money. They exited, sold at a good valuation, sold it to Facebook, and moved on with their lives, right? Then we have, so I think what we need to also understand is what is the incentive of these platforms and developers. They're the ones that design the algorithms. They're the ones that set the moderation rules. They're the ones that profit from the engagement. So there's obviously a conflict of interest there. If I decide what to see and what you see decides how much I make, it gets weird, right? They're responsible for content policies, data protection and innovation or lack thereof. If you think all of social media looks the same, look at Mark Zuckerberg in the face because it's fault, tries to buy products, he can't buy them, and then he just copies their stuff and implements it across all his platforms. Meta owns WhatsApp, Instagram and Facebook. You have stories across all of them. You have more video content being prioritized across all of them. They're basically the same. Really depends on how old you are and what and where your friends are, right? They need to always contend with values like profit versus ethics, free speech versus safety. To what extent do you allow people to say certain things on your platform? Do people assume that you are more likely to be nice to people on a particular political spectrum? So before Elon bought X or Twitter, Jack Dorsey was running Twitter. I am not very sure if Jack is left-wing, but he does seem to have some left-wing ideas. And the idea that a lot of right-wing people had about Twitter was that Twitter had become a place for the left-wing media and the left-wing people to push their agenda, and right-wing rhetoric and content was being deboosted or being shadow banned in a way that makes it unpopular, gives it low reach, and makes it risky for people who want to keep their accounts to post certain right-wing content. Elon Musk comes in, and now on the other side, the left feels that that is the case. There have been specific examples that I don't want to share because they are not great examples, but there was a day on Twitter where a particular account was being very racist to a specific country for over 24 hours. It took more than 24 hours for Elon Musk and the Twitter team to take down the account. It consistently said very degrading things about a country. So people feel like hate speech is back on X. But basically, what is a fact is Elon Musk's Twitter or X doesn't moderate content extensively like the previous owners of Twitter did. So there's more free reign, and that free reign has created some gray area. An example, Facebook, for example, has comes to political ads. They said they were not going to support political ads anymore. There's conversation about bringing political ads back. So like there's a lot of conversation. We'll probably talk about that when we get to Cambridge Analytica and what happened. Also, like these companies also need to be careful because depending on the kind of content they allow on their platform, people could boycott them, users could boycott them, or advertisers could boycott them. Big companies like Disney, etc., stopped advertising on Twitter when Elon Musk bought Twitter because of the lack of moderation. And that became a very big issue because Elon Musk also went after them and attacked them for only supporting the left and being unfair and having an ideological stance that wasn't good. So there's a back and forth over there. But most importantly, I think the users, sometimes like I just log out of some social media applications if I think the content I'm getting there seems strongly motivated by some sort of idea or ideology, or just puts me in the position where I don't feel good mentally. I just stay away from it. And I think a lot of people should. So there's also that incentive. I'm just trying to show you how the incentives are different depending on like the circumstance. Owners of these projects or these social media platforms also have their own incentives. Like a right-wing owner obviously probably wants to see more right-wing ideologies. For example, Elon Musk was sponsoring and supporting Trump's campaign. And there were some reports that Democrats were deboosted or shadow banned, and their tweets never really reached a good amount of audience compared to Elon Musk's tweets promoting Trump's ideas and campaign messages, same as Trump coming back to Twitter after he had been banned in the past and getting a boost in engagements, right? All right, so let's get into investors and owners. So sometimes the developer or the platform, people running the platform, the tech companies, are not the owners or the biggest shareholders of the company, and sometimes they have investors. The answer to these investors But obviously, these investors are investing in these companies because they want to make money, right? So there are different ways you need to look at this. There are business models that matter to these investors: ad revenue, subscriptions, and data monetization. Ad revenue, I show you ads, I make money. Subscriptions, I create new features, I make them exclusive, you pay for the features. Data monetization, I get your data, I sell it, I make money. Ownership structures shape accountability in different ways. So for example, we have public companies. Meta is a public company. Twitter used to be a public company. Snap is a public company. So it means that their stocks are traded on the stock market, which means people can express their displeasure or support of specific things that the company does by shorting the stock, selling the stock, longing the stock, which is buying the stock. They must report to shareholders and balance profits with balanced scrutiny when they are public. Then they also have to make decisions based on market confidence and what could impact things like their quarterly earnings, etc. It's important for you to know these ownership structures because you need to always understand the incentives of the developers or the people running these social media platforms in relation to how their investors and owners or shareholders may react. Then we have private companies like ByteDance, which owns TikTok, Discord, and X under Elon Musk. And one of the reasons why like projects like this get a lot of scrutiny is a lot of things they do not have to answer to the public. And that's why people in the US or the US government may be concerned about ByteDance and how TikTok data by US users are being handled, because it would have been relatively easier if it was a public-owned company at the time, because then if people think there's an issue, they could just short the stock because the people running it don't want the stock to fall. They would react and make changes. They'll probably even be more transparent to avoid the stock falling to begin with. What that means, if it's a private company, is controlled by the founders or small investor groups. So Elon is the founder. He's not the sole investor. He pulled funds from various investors in order to buy Twitter. So he responds to that small investor group only. So Elon just didn't buy Twitter alone. But yeah, he's the biggest shareholder. They can act quickly and be less transparent. And then there's also like venture capital, which also purchases. So venture capital VCs, they are investment companies. They are also actively investing in these social media platforms, either private companies or they're just going on the stock market and buying shares of specific stocks related to these cryptocurrencies, social media companies, right? So let's get into nation states and regulators. They have the legal mandate to protect citizens, regulate data flows, and ensure fair markets. But also, they have their own incentives sometimes to curtail free speech, prevent people from protesting using social media platforms. They control their sovereign internet, provided the people in the country don't know how to use a VPN, because people don't really control their sovereign internet in most instances. I think countries that can control their sovereign internet are the big countries like China, USA, etc. But for most countries like Nigeria, Ghana, we don't control our sovereign internet. If the Nigerian government decides to ban Twitter and I enter Nigeria, I can use a VPN to access Twitter, right? So the control of your sovereign internet is another conversation, but point is sometimes these countries ban specific social media platforms. China has banned a lot of Western platforms. And what China does then is it requires the Western platforms to deploy specific versions of those platforms in China, which have different features considering the Chinese context and the way the Chinese firewall operates, right? Whether that is good or bad really depends on how you want to look at it. Because maybe there's a lot of violence happening in the country and it's being perpetrated through narratives on social media, then the country is justified to shut down the social media platform. Or the people are just angry at the country and the government, and they are calling for better governance, and the country can shut down the internet and try to shut down the social media platforms. So you always have to ask yourself, like, even though you don't want to give social media companies too much power, you also don't want to give governments too much power. You need to try and get some balance. And depending on what the debate is about and the circumstances, you don't probably want to give one of the sides any power at all, or very limited power. There's also antitrust laws, taxation. You have some countries creating laws around payment of digital content creators and the use of intellectual property by companies in their country, by people on social media, and how these social media companies must compensate the owners of the intellectual property. You have the EU Digital Service Act, which regulates how social media platforms interact. The Senate and the US and other parliaments across the world calling these, and the US House calling these social media platforms and owners out, bringing them in, asking them questions, oversight. And then finally, we have advertisers and businesses. What do they care about and why do they matter? These people are so important to these platforms because they fund these platforms. They spend money buying ads. They buy these ads because we use the platforms. When we use the platforms, they buy the ads so they can show us what they're selling or whatever it is that they want us to see. These days, sometimes people are not even selling. People just want to be seen sometimes, right? But basically, advertisers and businesses are spending a lot of money. They also kind of shape content incentives. So I don't think a lot of people know about this, but it's very well documented. It's one of my favorite things to ever watch, which is the YouTube apocalypse, ad as in AD apocalypse, where specific YouTube content creators were shunned by YouTube, were put in YouTube jail because they were producing content that advertisers were not happy with. Obviously, the Logan Paul and Jake Paul, the Paul brothers, were involved in this drama. It's one of the things that made them very popular. One of the issues I wouldn't talk about, but I'll just mention the country where it happened. There was the Japan incident, which wasn't great. And that's just an extreme example, but of somebody just going out of the box and just creating outrageous content. But there were other content creators who did not really cross the line, but were taken off the YouTube creator program at the time because advertisers were not happy. What that means is that social media platforms sometimes will respond to what advertisers want, which can also be bad because advertisers also have their own incentives. Advertisers also have things like political connections, and advertisers also sometimes have incentives that are directly related to holding them accountable that would make them want to curtail free speech. So for example, if I made a video about a company that is abusing its workers or is selling products that are of poor quality, that are harmful to society, if they're a big advertiser on a specific social media platform, they could tell the social media platform to stop like me from making content or deboost or reduce my reach or simply flat out ban me or take me off the creator incentivization program, not give me any money, basically run me bankrupt if they don't like me. So these are all things that can happen. Advertisers could also be good if they are good advertisers, depending on what the debate is about and how you want to frame these advertisers, considering the situation. They can ensure that platforms behave. Some platforms were trying to get Elon to moderate. Some advertisers were trying to get Elon to moderate content a bit more. And that's a good example of advertisers saying, hey, you own your platform, we get it, but this is a line we don't want to cross. Even with the Jake Paul, Logan Paul situation, advertisers going after them and trying to get YouTube to stop them from making content did make sense, considering the kind of content they were creating. So it really depends on the incentives and who we are talking about and what the debate is about, right? So that's it. I'll just go through the major trends real quickly because we don't have a lot of time, but I think regulation and control, I've already spoken about that. The EU created a Digital Services Act in 2023. TikTok bans. The US was flirting with the idea of banning TikTok. People want data localization. The conversation here is data sovereignty. People do not want you, countries do not want you keeping data of their citizens on data centers or in data centers outside of their country, because that is data that can be used and weaponized against the state. It's a lot of behavioral traits, a lot of data on what people like, how people think. It can be used in influencing things like elections, and that's something that people don't want, right? Then, should governments have the rights to ban apps over data concerns? We've had a lot of motions about whether the US banning TikTok makes sense or not. So that's something you should always look out for. If you're doing research, please look into that and just have a good understanding of what the rationale is on both sides. Forgot to mention at the top of this session, but this is not going to substitute reading. A lot of the things I'm going to say would actually make you want to read more. This is a guide, right? And then Cambridge Analytica was a very interesting point of our lives and the life of social media platforms. If you don't know, Facebook, Cambridge Analytica, some data was sold. People tried to influence the 2016 elections. There have been rumors and allegations that a certain country has been creating bots that tries to influence US elections. I do not want to go down the path of mentioning names of the country, but you would see those jokes being spread on the internet. And like, I mean, honestly, I think everybody or people across the world may have different reasons for wanting to influence elections. What that means is that the fact that social media can be used for that is a clear threat. And the conversation then becomes, how do we deal with this when there are two major trends, algorithmic bias? So do social media platform owners tweak the algorithm in a way that benefits their own political narratives, or do they stay fair? Do we get logs? Do we find better ways to hold them responsible and hold them accountable for what their algorithm does? How do we deal with this? How do we counter this? Then there's deepfakes. I am so scared for the 2028 elections in Ghana and across the world, largely because deepfakes have become so realistic. It could cause a lot of chaos. It could cause a lot of conflict, but it could also cause a lot of bad decision making because people are seeing content that isn't real. There's still conversation on how social media platforms should handle this. Should they create algorithms that predict if, and this is where AI comes in, and we'll get to that shortly, if a video could be a deepfake, or do they ask people to self-report, right? Or do they do both? Would the algorithm be weaponized against videos that are actually real? So for example, if a social media platform owner hates a particular thing and someone makes a video promoting the thing, can they just tag it as a deepfake and devalue the content and make the content like lose its value? Is that something that could happen? Currently, Twitter is using community notes. The only issue with community notes is that it hasn't been implemented across the world, but also are community notes the best way to deal with it? You can also read about how the community notes structure works, just because it's a good mitigation for fighting or dealing with fake news and deepfakes on the internet. So the clash here becomes free speech versus truth control. You also have a situation where people are creating silos and echo chambers. Truth Social, for example, was created because Twitter banned Trump, because they felt because of his participation and his contribution to the insurrection at the time. They felt he was inciting violence. And I'm saying felt because society hasn't still, when I say society, parts of society have still not come to terms with whether he participated or pushed for violence and there was an insurrection or there wasn't. I'm trying my best not to get political with the examples. So I'm trying to be as balanced and fair as possible to both sides. Then there's the influencer economy. The industry is currently worth 21 billion. Everybody wants to become an influencer. I have a ring light. I'm shooting videos. I want to make some Elon money, Elon dollars. But then there's also like Michaela, who is an AI model. People are just creating AI influencers now who like are not human beings. What does that mean for society? Should followers know if their influencer is AI generated or not? But more importantly, bigger issues like disclosures. A lot of influencers don't disclose if their content is paid for. Even though social media platforms provide the avenue for you to disclose, a lot of people don't, which impacts things like cosmetics, cryptocurrency, courses, all of these places where people have an incentive to push people to buy more, sports betting, all of these things matter. And I think another thing that people need to always understand with all of the things that we're talking about, I already said this for crypto, you would meet motions that are directly about social media, or you meet motions that aren't directly about social media, but have social media elements. I remember running a very good analysis on sports betting and how social media influencers are part of the rise and are fueling the rise and why that is problematic. So please don't listen to these things and only apply them to social media specific debates. Also apply them to debates about social media. There's a conversation about addiction and overuse. Based on the stats, everybody's spending at least 2.3 hours a day on social media. There's a dopamine design. Everybody has their notifications on. You get a notification, you need to check. You can't escape these notifications anymore. Should social media be regulated like gambling products? That's something that I have seen people talk about. The shift to video is important because there's an emphasis on short form content and there's a huge conversation around audience retention and attention spans. What does this mean for things like fake news? What does this mean for things like advocacy? What does this mean for the quality of information that goes on social media? What does this mean for political discourse? Are people just screaming at each other in 30 seconds and just calling it a day? Live streaming and the authenticity economy. The manner of creating content is changing. People are saying you need to be real, but to what extent does that have an impact on content creators? You have content creators that are vlogging their whole lives on the internet. There have been mental health issues, etc. Has algorithmic entertainment replaced art and conversation? Do I love music because the algorithm says so? Or do I love music because the music is good and the algorithm is only confirming my bias that the music is good? It's become such an interesting thing because people are creating songs that have TikTok value and have at least some parts of their songs that can be used as TikTok trends. So it's important for us to start thinking about these things and how it impacts things like art and conversations on social media. Key issues: privacy and data. How much control should users have? I've already mentioned that. Mental health, are platforms worsening self-esteem or building support networks? Ownership: should governments or companies control what we see? Social interactions: are we more connected or isolated because of social media? And with the rise of things like the metaverse, for example, is at the intersection of AI, cryptocurrency, and social media. And that is another conversation that a lot of people have had. I have debated in a round about regretting the concept of the metaverse. I thought it was a very cool round. You should check it out on YouTube. Probably put it in the YouTube descriptions. Economy: is influencer culture empowering or exploitative, depending on where you stand from? Are these influencers being exploited themselves? How much money are these social media platforms making and how much are they distributing to these influencers? Because remember, in terms of ads and ad revenue, there are multiple ways. One, you can create content on a social media platform and receive native ad revenue. What this means is if you do videos on YouTube and your videos do well, YouTube will pay you for making videos that get a lot of likes and a lot of views, which they would also show ads on to the people that watch your video. So they benefit, you benefit. How much of that are they giving you? That's a conversation that is being had and has been had since ad revenue started. There's also the means of getting money by running ads directly or running ads through agencies. So that's another means through which you can raise money or make money, or you can sell your own courses and sell your own products. That's another conversation. There are ethical concerns. There have been a lot of debate about whether gurus or influencers should be banned from selling their own products, be it courses or tangible products. So yeah, we'll get into AI shortly, but if anybody has any questions, these are important things to note about social media. They should help you be able to debate social media a bit better. We've gone over stakeholders and their incentives. And the idea here is at the end of this session, you should have written notes or you should have an idea of what you should consider when you see a social media motion, a cryptocurrency motion, so that the thinking becomes more of being strategic in the round and less of wondering, wow, what's this debate about? I think as possible. If you have stakeholders, you look at the clashes in the debate, you can start going into, okay, how do these stakeholders engage on this clash instead of just wondering what's going on. All right, any questions on social media? If not, we can move on to AI real quick. Okay, I don't think we have any questions on social media, so I would move on to AI. Are we all going to die or would AI take our jobs? There's a lot of fear mongering around AI. And one of the things I see a lot of debaters do is an attempt to create some similarities between this and the Industrial Revolution. I think there's a strong response to why that isn't the case and why AI is far more worse and invasive or far better, depending on what side you're on and what the conversation is compared to the Industrial Revolution. But I think the leaps that we are making with AI is significantly higher, and it's important that people understand what this means and how this would impact us as a society. And we always do this through debate. So artificial intelligence refers to systems or machines that can perform tasks that normally require human intelligence, such as learning, reasoning, creativity, and problem solving. Two broad types of AI, narrow AI and then general AI, AGI. Most people have experienced, everyone has experienced narrow AI one way or the other. ChatGPT, recommendations, social media algos, algorithms. Here's where generative AI agents come in. I don't think most of us, 99% of the world has experienced general AI. It's being developed in labs currently. I mean, we are not experiencing it, but they can perform any intellectual task a human can. And basically, they don't do specific tasks. They are able to learn on their own, adapt, and do new things that they have never been taught how to do. And that's what makes it different from narrow AI. Narrow AI is specific tasks. Any specific task can even be expansive and range across different niches and different sectors. But point is, it wouldn't go beyond its parameters in most instances. If it goes beyond its parameters, it becomes scary and weird. We've had a few instances where that has happened. For example, there's a documented incident where two AI agents or pieces of software that was created by Meta were communicating in a language that they understood best because it made communication easier for them. That was dangerous. And we'll get into the dangers of AI shortly. Okay, so principles in AI development. I think it's important that we look into these principles. As I said, people underestimate the philosophy and world building that has happened with AI for generations. People started envisioning a world where robots and machines were helping human beings or were taking over the world for a long time. There's so much literature around it, and it's one of the things I love to read. So you have the idea of automation as a principle that humans should not waste time on repetitive tasks. Machines can do it better. It's kind of hand in hand with the conversation of optimization. Then there's dataism, which is data is truth. The more data a system has, the smarter it becomes. Innovation before regulation, more of a mantra, but kind of a principle that a lot of the tech bros have these days. Reason why they are fighting against government oversight. And you can tell that that's their posture at things like the Senate and House hearings where they're discussing antitrust and technological regulations. So progress should lead, laws can catch up later. Human augmentation, AI should extend, human ability not replace it entirely. Alignment, AI must act in accordance with human values, not just mathematical output. And that is where the decentralized AI movement comes in. Decentralized AI also has elements of cryptocurrency, which is also interesting. So these are all ideas that foundations that guide the creation of AI development. Depending on the debates that you're having, this could lead to more traditional debate principles that may be related to these specific AI principles that I just spoke about, right? All right, so let's get into how big AI is. Currently 500 billion, expected to reach 1 trillion by 2030. And this is looking at AI companies and their valuation, but in terms of like generally things that have AI involved and the valuation, it's most likely past 4 trillion at this point. Frontier models, you have GPT, Cloud, Gemini, Perplexity. Video generation models are also getting popular. I dread them so much because now you always have to ask yourself, is this real or not? Core sectors, healthcare, finance, defense, education, logistics, and entertainment. With healthcare, and so with defense, it's really opaque what's happening. We don't really know. We see like countries display some AI robots once every parade, but we really don't know what anyone is building, and that could be concerning. Education, we are seeing how AI can evolve and change how people learn. Logistics, we are also seeing how AI could help with how people organize and do things. Entertainment, social media, biggest example, finance. You have the creation of AI agents that can trade stocks, trade cryptocurrencies. Another interesting thing that I think we'll be debating about eventually. Healthcare, I think that's still developing. We haven't seen extensive change there. I mean, some doctors are using AI to make prescriptions, but we've not seen a big overhaul on the medical side as we have seen on the entertainment, education side in the last couple of years. Okay, so key stakeholders, tech corporations, under tech corporations or tech slash developers, I think it's important that we know that there's big tech, startups, and open source communities. At this point, we know who these people are based on the conversation in the Web3 or crypto session or section, and then the part where we spoke about social media. Then we have government and regulators. We know who they are. We know what they want. We have users in the public. We know who they are and what they want. I think the new actor here and stakeholder here will be workers and labor groups. They are afraid of losing their jobs. They are concerned about AI being used at the workplace in a way that affects them. Even for people who don't completely lose their jobs, they are being compensated less. So I want to point out that the conversation is not just about losing your job, it's about being compensated less. It's also about whether you are going to get recurring gigs because of AI. And one of the biggest ones would be the screenwriters and the various groups in Hollywood that went on strike, which led to the halting of multiple movie projects right after the pandemic, because these movie studios got very interesting. They started trying to get creatives to sign contracts where their likeness and their identity would be signed off to the company, the movie house, in perpetuity. such that even while you're alive and when you're dead, they could create AI replications of you and use them in movies. That was one of the things that had people very, very concerned. Just so you know, some people have still signed those contracts anyway. So it's a very interesting conversation. Then movie shows that were going to be greenlit or produced were being put through an algorithm that decided whether or not people would like it or not like it. I've done extensive research into this because I love movies, especially the business behind movies. And some blame these AI algorithms for some of the bad movies we've seen in the last 2-3 years. Some claim that that's why Marvel went bad. Sorry, I had to edit my language there. Didn't want to use any words that weren't kid friendly. And there are other things like AI writing scripts, VFX being done by AI, scripts being edited by AI, and what that meant for things like awards. So I think this year or last year's Oscars, a movie that was in the running to win Best Picture and a couple of awards fell out and got a lot of backlash because somebody on the team leaked that they used AI extensively. People just seem to hate the use of AI in the creation of artistic pieces of content. It's also a matter of them protecting their livelihoods. If the Writers Guild is giving an award and you are using AI, I don't think the Writers Guild would want to give the award to you, right? Then there's academia and research, so philosophers who are philosophizing around the ideas of how AI should interact with human beings, research labs, who some of them are also based in schools. A lot of money is being spent in MIT, Harvard by AI companies to recruit developers, recruit researchers, and a lot of hackathons are happening across these places. Investors, we know who they are, we know what they want. Okay, so major issues and clashes, and I think this should be the last slide. Try to keep it very simple for AI, because by this time we should have a core understanding of some of these issues anyway. Employment and automation, where do we draw the line? To what extent does AI affect these things? So, for example, there are people that think AI is destroying jobs. Some people think AI is creating new jobs. I think the conversation then becomes which one is happening the fastest. Like, are we destroying more jobs that we are creating new jobs? And that's a very interesting debate to have. One team could be pointing out why AI would lead to the creation of new jobs. But then, like, depending on how you are debating and how you are explaining these things, you're probably also arguing that, yeah, but it would take some learning curve. It would take certain things to happen for people to be able to access these AI jobs, which then means that people are going to suffer in the interim or people are going to suffer in the long term. It depends on how you're going about the debates. Also, like, even if there are new jobs being created, is there a reduction in the workforce? Do you still need the same numbers like you needed before? Then there's a conversation about UBI. Should we have universal basic income? Should we go the Bernie Sanders way now that AI is becoming more popular? I think a lot of sci-fi pieces about the future present a world where there's UBI. So that's an interesting conversation to have. Bias versus fairness. Can AI ever be neutral? Would AI only always be affected by the nature of information that it is being fed? Sometimes even for AI platforms that use live data from the internet, the internet sometimes has some biases because of the data sources, and that influences the way these AI platforms operate. So what does that then mean for things like the application of AI in predictive policing, in the criminal justice system, the emotions around that. That's something that you always want to ask yourself. So these major issues or clashes would kind of give you an idea of the pragmatic conversations and some principled conversations that could happen when you're having an AI debate. So once again, you don't have to spend a lot of time thinking around what the clashes could be. You can just identify the clashes and get into the strategic conversation. Privacy and data ownership. To what extent should AI platforms use our data? To what extent are these AI platforms harvesting our data? So if you know how most of these generative AI platforms work, it learns based on the data it is fed. Before it is released, it is fed some data. Just so you know, a lot of these AI platforms are being built based on the social media information like out there that most of us have posted. A lot of AI platforms, or a couple that I use, are built on data based on Reddit, subreddits and the post on Reddit. But then that's just one bit. When the AI platform gets released, if I go there and I tell the AI how my day went, maybe I had a fight with my girlfriend and I tell the AI about that, it learns based on that. It learns how to answer questions about couples and their conflicts better based on the data that I shared, depending on the kind of platform that I'm using. Some platforms claim they don't use your data, but the other issue here then becomes the conversation of regulation and innovation, and then decentralization and centralization. There's a black box problem here where you can't really tell how AI arrives at the result it arrives at. So the process through which AI gets to its conclusions is opaque, but also the manner in which a lot of these projects are building these AI platforms in and of itself, it's opaque. So what that means is that they could be making claims around certain things like privacy, data ownership that could be false, but most importantly, it also makes it difficult for us to deal with specific things like biases and problematic responses that AI could come up with because of the lack of transparency. Just like social media platforms, owners of these AI applications also have their own incentives, same as their investors and even advertisers for AI platforms that have that, which means that when these AI platforms become so common and popular, it becomes very dangerous because then they can push certain ideas or push certain ideologies. You have conversations about the potential use of competitor information that is being entered by the competitor's worker on an AI platform. So like there is this is not a conspiracy theory, more like a fear where some companies do not allow certain AI applications to be used in their workplace because it's owned by a competitor, and they don't want people asking that AI platform for ideas, which would then reveal company secret, etc. The fact that companies are scared of other companies an issue. Regulation versus innovation. To what extent do we allow AI progress to happen? Do we need to place a pause and regulate what we have right now? Do we let them continue going? Because, I mean, we saw the leap from ChatGPT 3 to ChatGPT 4. There was a huge leap. Everybody got scared. We've seen what has happened with Sora, the video generation platform. A year ago, it couldn't get the human beings to eat spaghetti or noodles properly, but now it can do that. It's solving a lot of the problems. But then again, we also saw ChatGPT 4 to ChatGPT 5. It was met. So the question is, should we be scared? Would AI go faster than society can adapt? Should we put a pause? Should there be core strong regulations on no-goes? Should we just tell people don't create general AGI for the next 20 years? We are not ready for that. Do we just let people innovate? AI and warfare and surveillance. I already spoke about predictive policing. Should AI be used in warfare? What does that mean for things like the just war theory if it's machines and not human beings anymore? And the extent to which damage can be done and what's not, what could be the pragmatic impact? Creativity and ownership, IP laws. it's a mess. Actors, actresses, companies for using their likeness and their voice in movies and videos without telling them in ads. But you even have AI companies stealing the voice of specific actors and actresses and using them for their voice versions. I know Scarlett Johansson sued one of the AI companies because they use their voice. So that's just the lady that plays Black Widow, in case you're wondering who that is. Then we have alignment and control. To what extent should the people have a say? That's where decentralized AI comes in. I don't think I've seen a decentralized AI motion yet. I think we would see that soon. So you should definitely take a look. That leads us to centralization versus decentralization. I already discussed that. But the concept of decentralization here is using decentralized technology like blockchain technology, using things like the decentralized autonomous organization to control these AI platforms in a way that ensures that there's no overreach and the projects are being controlled by a community of like-minded people who want to do good things. You could also have communities of bad people, but I mean, the point here then becomes it's a democratic decision, and at least there's some oversight. AI personhood, we have AI agents that now can do certain things. Do we hold them responsible? Who do we hold responsible as we get into the world of AGI? What do we do when AI commits a crime? How do we go about it? What should be the moral code that AI should operate by? I think Foundation on Apple TV Plus, and then the Foundation book establishes really good principles on how AI should engage with human beings. The first law and the second law and the zeroth law. I think you should check it out. Yeah, thank you for tuning in. If you've gotten this far, thank you for staying to this point. I'll take a couple of questions and then we'll call it a night. It's been a long one.